We said this just 2 days ago. With the management shakeup at Deutsche over the weekend, with John Cryan pushed out, it is like the legend, the legacy of Anshu Jain completely vanished. Now, fixed income, this is the business he built, he hired, he overhired, he overpaid, decimated. Who is this bank going to be?
It's going to be a German-focused European bank, and I mean, I think, you know, they're still going to be decently sized in fixed income, but if they lose people from this, they might not be the top three player that they always were.
If you can't pay, there is no way to maintain your position as decently sized. Erik, what do you think?
You know, Stephanie, I think John Cryan is taking a page from James Gorman's book. Remember in Davos a few years ago when we were talking to James Gorman about the complaints that he was fielding from employees at Morgan Stanley that their bonuses were being cut because the firm was in turnaround mode and was trying to rebuild capital. And he said, if you don't like it, you can leave. And the truth of the matter is that these people, as you know well, and Michael certainly knows well, don't have very many places to go. Just think of what we saw the other day or over the past week from Wall Street. Over the past year, Wall Street has slashed 20,000 jobs. Yes, Goldman is hiring a few thousand people over the pace of 12 months. Morgan Stanley a little bit too, and Wells Fargo a little bit too. But on balance, tens of thousands of jobs are still being cut. There aren't. And the hedge funds have hired the people that they want already.
Erik,
but these people don't like it. They don't have anywhere to go.
Erik, here's the problem. We heard this out of Morgan Stanley. You and I did 3 years ago. James Gorman said, I'm leaning out of that business. But he didn't retreat entirely. He kept a hand in fixed income, specifically in credit, and that's what got cut off earlier this week. They lost a lot of their talent. They pulled back some of their resources, and they're kind of in that business. And if you're kind of in that business, you can get your head cut off, which is what we saw just 2 days ago. So the question is Deutsche going to completely pull out or pull a Morgan Stanley, which hasn't seemed to work?
Well, he's not saying, I mean, yes, they are retreating from some businesses, but cutting bonuses isn't necessarily a retreat. It's a challenge to the employees. Are you prepared to stick it out and wait and see if things improve as we retool this organization? Or are you going to walk out the door and see if you can find better prospects elsewhere?
Because people trade high-yield bonds because they love getting the benefits and waking up early. Give me a break.
Yeah, I mean, I haven't worked at a bank unlike you, Stephanie, but a bonus is a bonus, and you get paid a bonus in good years. If you have bad years, you lose a third of the bonus. To most of the world, that would seem like sort of reasonable.
You're not a trader. You're not a trader. Yeah.
I'm not a trader. I never have been a trader. But
I mean, that's sort of
most of the world is not too sympathetic to this.
And Wall Street's not asking them to be. But that's sort of the upside of working at a bank. You basically get paid in a good or bad market, as opposed to if you work at a hedge fund, where listen, if you don't make money, if you don't get over your high water mark, take a hike. Good luck. You'll lose it all. That's the cushion of working inside.
That's absolutely right. But getting paid in a good or bad market is not capitalism.
I mean,
it's not capitalism.
To Erik's point, they lost one more place to go. Credit Suisse slashing the macro business.
That's right.
You know, there's one less place you can bolt to.
So let's go to a different bank, Goldman Sachs. They reportedly are hiring traders from Glencore and hedge fund Moore Capital Management in an attempt to rebuild Goldman's bulk commodities team. Goldman's top coal traders left earlier this year to form their own firm. So explain this one to me. So Goldman just had some not very good results that came out, right, Michael?
Right.
And part of it is in sort of the high-risk trading part. So now they want to go into commodities, which seem to have been pretty high risk to me.
But this is where Gary and Lloyd come from. They are Jay Aaron boys. This is their DNA.
Yeah, and they've pulled back on a lot of the investments in that area. They had a great commodity investment business for a long time. They scaled that back. They sold the Columbia mines, which were not a good investment over the last few years. So they really scaled back. This is kind of building back up on the trading side because they lost some traders earlier this year. But Goldman has said they're not leaving commodities, even as everyone else does, even as Deutsche does. They're going to stick it out, and they hope to be the one remaining player that captures a lot of market.
So, Erik, unlike the fixed traders at Deutsche, this is a place where you could go if you're a commodities trader. They do have someplace else to go, it looks like, Goldman.
Yeah, maybe. I mean, we're talking about two people here for the moment. It looks a little bit counterintuitive given what we've seen happen to commodities prices, but it makes me wonder, Michael, whether this doesn't signal Goldman's ambitions or intentions or expectations about the investment banking prospects in the energy and bulk commodities area, because there's distress there. And
Right.
Goldman has always seen an opportunity for synergy between trading and investment banking. You can structure deals if you have the expertise, the commodities expertise in-house. And if they have these people, then they might be able to do a better job in that, say, than a JP Morgan, for example, which got rid of its commodities business.
Right, and they've done a lot of reserve-based lending, lending against commodities. They've really stepped up that business. And I thought it was interesting that in the third quarter, they said commodities revenue was actually up from the second quarter, and they said they benefited from a drop in prices. So they may have been positioning themselves for this opportunity.